All right, let's talk about Dollar Tree, ticker DLTR. This stock has been on an absolute tear lately. But when you look at the charts, well, it's like they're telling two completely different stories. So the big question is this thing about to blast off to new highs, or is it teetering on the edge of a serious breakdown? Let's dig in and see what the data says. And that's really the heart of it, isn't it? You've got this incredible upward momentum pushing it higher, but at the same time, there are some pretty serious warning lights flashing on the dashboard. So what we're going to do is unpack both sides of this thing, piece by piece. So everything kicks off right here, 122.44. That's the price we're working with. And you got to wonder, right? Is this number a launch pad for the next big move up, or is it the edge of a cliff? And right off the bat, the first thing that just jumps out at you is how far this stock has flown. I mean, it's trading way, way above its 200-day average. That's kind of its long-term home base, which is sitting all the way down at 94 bucks. You honestly can't get a clearer signal that we are in a massive bull run. Okay, so let's dive into that bullish side of the argument first. We're going to look at all the reasons to believe this incredible momentum might just be getting started. And look, this isn't just wishful thinking. The short-term data, it's almost all pointing straight up. It's incredibly positive. So let's get into what that actually looks like. Now, to really get this, we've got to talk about moving averages. All it is really is the stock's average price over a certain number of days. Think of it like this. It smooths out all the crazy up and down noise so you can see the real underlying trend. And just take a look at this. The current price isn't just a little bit above its 5-day and 20-day averages. It's floating way up there. That is not a small gap. It's a huge sign of some really aggressive buying pressure lately. This right here is what a textbook powerful uptrend looks like. But it's not just the averages, you know? The good news for bulls keeps coming. We've got two other huge indicators flashing bright green. The MACD, that's your momentum gauge, is super positive. And the ADOSC indicator, which basically just follows the money, it shows that cash is pouring into the stock, propping up the price. Then you top it all off with a massive single-day gain of over 5.5%. Yeah, it's pretty obvious who's in charge right now. Okay, but here's where the plot thickens. Seriously. Just because a stock is on fire doesn't mean it can't get burned. It's time to flip the coin and look at the other side. All the warning signs suggesting that maybe, just maybe, DLTR is flying a little too close to the sun. And this is the question you have to ask yourself, right? When you see a chart go almost straight up like this, has the stock just totally disconnected from reality? Is it just running on fumes at this point? Well, some of the data is starting to hint that, yeah, it might be. Which brings us to this really important idea in trading, the concept of being overbought. Now, this doesn't mean the company is bad or the stock is junk. It just means it's gone up so far, so fast, that it's kind of statistically due for a pullback. Think of it like a sprinter who just finished a race. They're probably going to need to stop and catch their breath for a minute. And here is warning sign number 1, a big one. This shows us that DLTR is trading at almost 95% of its 52-week high. I mean, it is bumping its head right on the ceiling of its yearly range. Now, sure, that's a sign of strength, but that level often acts like a brick wall. It's where sellers love to come in and start taking their profits off the table. And if we dig a little deeper, two of the go-to indicators for sniffing out an overbought stock are absolutely screaming red right now. First, you've got the RSI, the Relative Strength Index, which is clocking in at over 75. Anything over 70 is considered the caution zone. But then you look at the StochRSI and, wow, it is literally completely maxed out at 100. And that's the key here. A StochRSI pegged at 100 is what traders call an exhaustion signal. It's basically the chart's way of saying, I'm tired. It suggests the buying pressure has run out of steam for now, and that makes the stock super vulnerable to a correction. This is probably the single biggest warning sign we've seen so far. And if that's not enough to paint the overbought picture for you, check out this number. The stock is trading almost 14% above its statistical trend line. That's a huge deviation. You know, it's just like stretching a rubber band. The further you pull it from its resting point, the more tension there is, and the more violent the snapback is going to be. Okay, now this is what we call a divergence, and it's something traders pay very close attention to. So on one side, you've got this explosive price just rocketing up. But on the other side, you've got this thing called on-balance volume. Think of it as a long-term tracker of buying versus selling, and it's actually negative. What does that mean? It suggests that even as the price is popping, the big long-term money might actually be quietly heading for the exits. That's a massive contradiction. It's a huge red flag. So what are we left with? We have these two completely opposite stories, right? You've got incredible short-term power clashing with some really serious long-term warning signs. And that puts this stock right at a fork in the road, with two very, very different paths it could take from here. So let's break down the two main scenarios that everyone's watching for. First, there's the blue sky breakout. That's the bullish stream. If the stock can punch through that 52-week high, there's basically nothing but clear skies above it, and it could just keep on rallying. Then there's the other scenario, the pullback to support. If it gets rejected at that high, all those overbought signals suggest it's likely to fall back to find support, probably somewhere in that 114 to 116 zone. But here's the thing. Whichever way it decides to go, you better buckle up. The stock's average true range, which is just a fancy way of measuring its daily volatility, is telling us it could swing by more than $4 a day. So yeah, this is definitely not a stock for the faint of heart right now. All right, so where does that leave us? What's the final verdict here? How do you possibly make sense of all these conflicting signals? Well, it really feels like this stock is walking on a tightrope. And I think the analysis we're looking at sums it up perfectly in this one little phrase. You just can't argue with the strong bullish trend, but at the same time, you can't ignore how extended it is. That one sentence, it just nails the whole dilemma, doesn't it? So let's wrap this all up. The good news? This is a confirmed bull market, no doubt about it, and it is firing on all cylinders. The bad news? A whole bunch of key indicators are screaming that it's overbought and due for a correction. It really comes back to that rubber band analogy. Dltr is strong, but it's stretched so tight. It's got a ton of energy, but it's also under a whole lot of tension and could snap back at any time. And that really leaves us with the ultimate question, not just for this stock, but for any stock that gets this hot. What's the greater risk? Is it the fear of missing out by getting in too late? Or is it the fear of getting crushed by getting out too soon? That is the razor's edge that Dltr is walking on right now.